3, 2, 1, and then go. We are there. Fine. Good morning, friends. Good morning. So how are you all? So hope you're doing well and having a pleasant stay, safe stay. Okay. Fine, friends. As a part of our series of discussion on CA Foundation Accounting, so today we are here to discuss and complete accounting concepts, friends, basically. So in my previous classes, we have already completed with entity concept, money measurement concept, periodicity concept, accrual concept, matching concept, going concern, dual aspect concept, consistency, and then materiality concept. So, okay, and materiality, of course, those were all covered. So now we are left over with 1, 2, and 3 concepts and few more small terms that you need to understand the meaning of it. Okay. Now, friends, actually, this full disclosure and completeness is almost the same. Okay. Conservatism and prudence, the same. Okay. So those two will remain same. And next, reliability, relevance, neutrality. Okay, all these are different aspects. Fine, friends. Now let us get into our discussion and we will finish off all these concepts today so that we will be able to start and finish off with two very small chapters, very small units tomorrow. Okay, in tomorrow's class we are going to discuss, okay, tomorrow at 4 o'clock we are going to discuss about capital and revenue expenditure, and we will also discuss about what is the other topic called contingent assets and contingent liabilities. So tomorrow that will be our target. Got it, friends? So today let us start with our session. So what are left over? First of all, I will discuss today about conservatism. So what is meant by conservatism? Even people call it as prudence also. Prudence, both are same. Both are one and the same. Okay, conservatism or prudence. What does this conservatism or prudence says is, my dear friends, anticipate probable losses, but never anticipate gains. In bracket, unless they are earned. This is what our conservatism telling us. What is that, sir? Anticipate probable losses or sometimes even probable expenses in the future also, but never anticipate gains or incomes unless they are earned. This is what it is trying to tell me. Okay, let me just okay, fine. I hope you got a better view now. Okay, so let me just start and let me see if there are any doubts. No doubts posted till now. Okay, so friends, anticipate probable losses or expenses but never anticipate gains. What does this mean? What are they trying to tell us? Very simple, my dear friends. Imagine once after you finishing off your CA, imagine you got into a job. Okay, you got into a job. In your job, okay, you will get salary every month, correct? Maybe first of every month you will get salary. Fine, sir. Now imagine your salary is 1 lakh rupees. Okay, will you, after getting your salary, what will you do? Are you going to spend full 1 lakh at a shot? Okay, first month salary you will finish it off because you have to give party to your friends, relatives and neighbors, etc, etc. First month salary gone. But from second month, third month onwards, will you fully spend that full 1 lakh rupees? No. What will you be doing? You will save some money aside. For example, if 1 lakh rupees is your salary, okay, you will pay your rent, you will pay for your medicines, provisions, okay, some stationery items, etc, etc. You will pay your electricity bills, water bills, okay, all these things you will pay, and at least some 30,000-40,000 rupees you will keep aside. Okay, in the 30,000-40,000 rupees, 10,000 rupees you have spent for shopping again. At least you will save some 25,000 rupees you will save, na? Correct, amma? Why are you saving it? You are saving because for future, maybe in future you may require for hospitalization. Maybe in future you may require some money for buying your house. In future you may require some sort of some money for education. Any emergency you require some money. So for that purpose, you will save some money aside. Correct, my dear friends? Here, indirectly what you are trying to do is, you are trying to anticipate your losses and expenses of the future, and accordingly, you are trying to save. For meeting these losses and expenses, you are trying to save some money out of your salary. All of you agree with me? Yes, we are trying to save. Now in business also, do we save, sir? Yes, we save. In what way? We save, we keep aside money in the name of provisions, or we keep money aside in the name of reserves. In the name of reserves. Of course, friends, when we are discussing our final accounts, there we will discuss provisions and reserves in detail. Okay, already for few students we have already covered that, but still, when we cover provisions and reserves in detail, then we will have a look at it. Okay now friends, so when you try to save money for the sake of provisions or reserves, usually we use this. Okay friends, fine, understood sir. What are they trying to say? Never anticipate gains. Imagine, maybe in the future also I will get salary. What I will do, now only I'll take a loan and I'll start enjoying it. I'll start spending it, anticipating that. Imagine you will finish off your CA in 4 years time. Okay, after 4 years your salary will be 1 lakh. With that intention, will you take loans and spend it off right now? Will you do it? Definitely no. Why? Because you cannot anticipate. Naturally, none of us will anticipate any kind of gains, and naturally no one will anticipate gains, my dear friends. Okay, understand? You cannot make a gain unless it is earned. If you earn, it means if you have the right to receive, then only you should recognize your gain. Otherwise, you should not recognize your gain if it is not earned. Estimating that you may get it, you should not recognize. Only you can recognize only when you earn it. Earn it means what, ma? Right to receive is established already. Earned means what, ma? When you got the right to receive is established. When the right to receive is established, we call it as earned. So till you earn, till you get the right to take the money, you are not supposed to recognize any kind of gains or incomes. But though it is not incurred also, for regarding future losses and profits, you can make a provision. You can keep some money aside out of your profits and create some reserves in order to meet those losses and expenses in the future. Understand? It means for expense and losses you can anticipate, but for incomes and gains you cannot. But never anticipate incomes or gains unless they are earned. That is what my conservatism or prudence telling me. Understand? Now question will be something like this. For example, if at all they start asking you like provisions are made based on which concept? Conservatism or prudence? You should understand, okay, how provisions or reserves actually came into existence. The existence of that came out of conservatism or prudence. Got it, friends? That is how you need to understand these aspects. Okay, Nama? Sorry, sir. Conservatism, I understood. What is my next concept I have? I have cost concept. Cost concept. What is this cost concept is all about, sir? Cost concept is all about how do you treat your assets? How do you treat your assets? Okay. What are they trying to say is, when you record or when you recognize any kind of asset, that asset must be made at cost. That asset must be recorded at cost. Now this asset can be a fixed asset, okay, or this asset can be an investment, or this can be an inventory also. Let it be anything, my dear friends. It can be anything, but an asset has to be recognized only at cost. Cost means what? Either paid or it can be payable also. It means already you would have paid or you may have to pay in the future also. Anything can be a part of your cost, but in that cost is in relation to either purchase of that asset or construction. It can be in any possible manner. Okay, and it includes, okay, it also includes all related expenses. all related expenses till the asset is put to use or made it saleable. Make it saleable. Sir, what is the meaning of this, sir? Wait, my dear friends. As a part of our syllabus, we have fixed assets as one topic. There, in depth of all these things, we are going to discuss how to calculate the cost of a fixed asset. That we are going to discuss in a separate chapter called depreciation. Sorry, not fixed assets. Depreciation. There is a chapter called depreciation. There, in depth of everything about fixed assets, we are going to discuss all the costs and everything. Also, when you come to your IPCC or CA Inter, you have a separate chapter and a standard AS13 investments. You have a separate chapter, friends. So there about investments you will learn in depth, not now. And inventories in your foundation itself, we have inventories topic. Okay, shortly you are going to undergo the topic as well. So under inventories topic, we'll be discussing that. Understanding, friends? It means fixed asset inventories now only in our foundation itself we are going to discuss, and about investments we will discuss when you come to CA Inter. Understanding, friends? But ultimate rule is that cost concept relates to what? Assets, and those assets must be recognized only at cost. It must be recorded or recognized only at cost. That cost can be already paid or in the future payable is also a cost only. It can be in relation to the purchase cost, it related to a construction cost. For example, you purchase a vehicle, then it's a purchase cost. You construct your own building, construction cost. It can be anything, friends. Then their basic cost plus all related expenses till the asset is put to use must be and or make it saleable. Okay, or make it saleable. That is what we have to understand the definition part. But as I told you, tomorrow itself we are going to discuss a topic called capital and revenue expenditure. Nama, there we will discuss in depth of this. How do you recognize your cost at the time of purchasing of asset? How do you recognize your cost at the time of construction of an asset? Both we are going to discuss in depth. But ultimately, what should be in your mind? You must record or recognize an asset only at cost. That you have to keep in mind as of now. How to calculate that cost? Tomorrow itself we are going to discuss. Okay, Nama? Thank you so much. That is about cost concept, friends. Smaller one. Okay. And next we have, the next one is realization concept. Realization concept. What is this realization concept telling me, And this is also relating to assets, my dear friends. Realization concept is also relating to assets. What it is trying to tell me is, a realization concept says, if there is any gain in assets, don't recognize it unless it is realized. Unless you realize it, never recognize any kind of gains. What does that mean? Imagine, sir, I purchased a land for 10 lakh rupees. Okay, all my costs, purchase cost, even for payment of stamp duty, registration, all these points to put together, 10 lakh rupees are spent. When, sir? 5 years ago. Okay, now at what value I would have recorded, friends? I would have recorded 10 lakhs only. Recording is at 10 lakhs. It means in my books, the value will be 10 lakhs land. But now, my market value, when after 5 years, my market value became 40 lakhs. My market value became how much? 40 lakhs. It means, if at all I sell it right now, I'll get how much money? 40 lakhs into my hand. my dear friends. It means, how much gain, 30 lakh rupees gain. Wow, this is my gain, profit I have got. Show me the profit. How can you show the profit? Will you be able to show the profit? I can't show the profit. I'll not be able to show the profit. Why? Because it is not realized. It is not realized. Did you get that profit to your hand? No. If you sell, you will get it. But did you sell right now? No, sir. Then shut up and keep showing only at 10 lakh rupees. Don't change the value to 40 lakhs and recognize 30 lakhs as your profit. Wrong. You should not do that. Realization concept says you should not recognize the gain on any asset unless it is realized. My dear friends, when will you realize that profit? Only when you sell it. Understanding, friends? So what is this concept telling us is you should recognize only if it is sold. Otherwise, never recognize unrealized profit. Understanding, friends? That is what they are trying to tell us. Okay. But for this rule, my dear friends, in accounting standards, there are some sort of modifications done. Okay, some sort of modifications done in our accounting standards. So when we go to that level, we will discuss. Okay, in your CA inter level, we'll discuss. But as of now, what you will remember is, as per realization concept, never recognize any of your profits unless they are realized. Unless they are realized, don't never recognize your gains. Okay, Nama? Good. Next, coming to the next ones. Let us move on to the next one. So as a part of our discussion, cost concept, relation concept and conservatism both are over. Now let us move on to few topics, my dear friends. What is meant by understandability? These are not concepts actually, but these are few points that you need to understand the meaning of all these things. Okay, now. So first of all, understandability. What is understandability telling me is, friends, whenever you make accounts, okay, whenever you make accounts, you write journal entries, you make ledgers, okay, or you make your final accounts and all, you should ensure that people who use it, okay, in our accounting process, we told Nama at the end we will communicate. Now, to whomever you communicate, let it be to the banks, let it be to any financial institutions, let it be to the government, let it be to your creditors, let it be to your debtors, let it be to your employees or owners or managers, whoever on this earth, whomever you share that information, friends, they should be able to understand. When will they understand, my dear friends? One small point is, when you make accounts, your accounting in a common format that everybody makes it. Correct, Amma? So obviously what will happen when you create your own format, okay, your own way of presenting things, where only you will understand. What is the fun of making accounting when others cannot understand? So ensure that your accounts will be understood by anybody who uses them. Those who uses them. Those who uses them means what? As I told you, different people will use in different way. For example, if at all you give those documents to the government, they should be able to understand how much profit you have earned during the year. If you give it to creditors and all, they should be able to understand your financial position. Understand? So like that. Understand? Your employee should understand what kind of forecast that they can make about the future. In such a way, it must be understood by each and everybody. If it is not being understood, there is no point of making any kind of accounting. Understandability is must and should, not by just you. It must be understood by every normal person who uses that. Understand? Even those people having basic knowledge in accounting also, they should be able to use your accounting. Understand? And they should be able to draw some conclusions and etc. Next, second one is about relevance. Second one is about what, ma? Relevance. Relevance means what? Now, whatever be the accounting that you are making, it should be relevant. Relevant to what? Relevant to your business model sometimes. For example, I am a service organization. If at all I make manufacturing account, trading account, it is not at all relevant. Correct, Amma? Because manufacturing account will come only if at all I sit and produce some goods. I am a service-based organization. Why will I make manufacturing account? Not relevant. Next, I am service-based organization. Trading account, why do I require? Trading account is required only by traders, ma. Traders means who? Those who buy and sell the goods. Those who buy and sell the goods. Only those require your those require trading account. Why is a service organization require trading account? Not required. It means, as a small example, a service-based organization do not require what? Manufacturing account and trading account. These two are not required for them. Correct, Amma? that you need to keep in mind. They are not relevant to them. Okay, sometimes relevance also relating to period also. Sometimes what happens, for example, I want to analyze your profits, okay, in the last 6 months or in the 12 months, or which year does it belong to? 1920, 2021, which year your business belongs to? Does your business belong to? That is where we are talking about relevance. So whatever be the accounting that you're doing, it should be relevant to the context of your business. It should be relevant to the context of your period of accounting. It should be relevant to the nature of your business. Understanding, friends? So it should be, in short, it should be relevant to everything in your business environment. Understanding, friends? That's why even you see sometimes in this relevance we will discuss one more point also. Sometimes, for example, being a bank, take an example of a bank, ICICI Bank. All of you know that, right? ICICI Bank. It's a, first of all, it's a bank. It means it has to submit some information to RBI. Correct, ma'am? It is a company. ICICI Bank Limited, it's a company. So it has to submit some documents, financial information to MCA, Ministry for Corporate Affairs. It's a listed company. Because it's a listed company, they have to submit their financial information to SEBI, Securities and Exchange Board of India. They have to submit some information to SEBI also. See, one organization has to submit to 3 different entities, same financial information. But RBI format is different, company format is different, SEBI format is different. Now, even the format, which we call it as a framework, format or framework. Now, relevant framework or relevant format also has to be used. Relevant framework or relevant format also has to be used. Getting my point, my dear friends? That is what is about what, my dear friends? Relevance. Relevance. It should be relevant to our industry, relevant to our business, relevant to the department, relevant to the timing. Reliability. To actually bring reliability into picture only, chartered accountants are brought into picture. Now imagine I will make accounting in my own way. Understand? I'll just put up some number. Okay, sales some 20 lakhs happened, expense some 18 lakhs happened, 2 lakhs profit, I'll pay this much tax. I will actually try to prepare accounts as per my wish. But what is the guarantee that I can actually depend on the information that you have made? There can be errors, there can be frauds involved, there could be frauds involved. Anything could happen, right? Anything could happen. So obviously what we are trying to say here is reliability is a biggest question. Thereby chartered accountants come into picture. Chartered accountants, what do? They sit, go through all the accounting, go through all the accounts, and they will certify. Yes, the accounting is in true and fair view. The accounting is good. Now, the reliability is on the chartered accountant, those who have actually verified the accounts. Understand? Not just the businessman. Understanding, friends? So, for example, friends, imagine if at all the accounts are made by a chartered accountant, the reliability will be higher. Because we assume that errors will be minimized. I not say chartered accountants do not do any mistakes. They do. Chartered accountants do mistakes, but those mistakes will be minimized. Those mistakes will be minimized. Understanding, friends? Okay. Sorry, ma. Those mistakes will be minimized. Got it, friends? Okay. But if at all the same accounts are made by just BCom passed candidate, you can assume that mistakes will be higher in number. So what I mean to say is, blindly, how can I depend on my accounts that I have made, which we call it as reliability. To improve reliability, we can have auditors. To improve reliability, we'll have experienced accountants sitting and doing the work, accounting. All these things can be made. Next, comparability. This is also very, very, very interesting. What is meant by comparability, sir? Comparability is all about, imagine you got your progress report. Okay, there was a fantastic advertisement, right? Some noodles advertisement, I guess. Okay, son will come and tell mom, I got second prize in running race. Mom, with that happiness that son has got second prize in running race, immediately she'll cook noodles for him. Okay, so dad comes into picture. Dad will come and ask, dad, okay, how many runners were there? He will say only 2 runners, dad. Only 2 runners, and he got second prize. Okay, what I mean to say is that number 2, second rank, second place, second position, second prize, doesn't have a meaning unless you have the other scenarios into picture. Sir, other scenarios means what? Imagine second prize in your classroom level, class level competition, second prize in your college level competition, second prize in your town level competition, second prize in district level competition, second prize in state level, second prize in national level, second prize in Olympics. Does it make a difference? Number 2 only, second prize only. But depending on where you got that second prize, value changes. If you got second prize in your classroom level, everybody will say hi bye and tomorrow everybody will forget. But if you get second prize in Olympics, it is a history. It is a history. Your name will be written in history, and you will get a lot of government facilities, government government will give you a lot of benefits, government will give you a job, government will give you each and everything because you got second prize in Olympics. Understand? You represented the country and you became top there. Understanding, friends? What am I trying to say is, here why second position has got that such a deviation? It is because we are trying to compare. We are trying to compare. In second position in our classroom, hardly there will be some 10-15 competitors. Your college level, some 50 competitors. Town level, 100 competitors. District level, 200 competitors. State level, 500 competitors. National level, 1000 competitors. Olympics, you will have n number of competitors coming and selected for fine. First of all, getting selections for Olympics only is a great achievement. In that, again, you got second prize. Understanding, friends? So thereby upon comparison, value changes. Understand? One more example. Imagine in our school days, if at all they give you a progress report only relating to your marks. Only relating to your marks. Maths, 45 out of 100. Your dad will ask you, hey, what is this? You got only 45 marks for 100 marks. You got only in maths. What is this? Are you not studying properly? Then you will say, dad, everybody got the same marks, dad. Everybody got 40, 46, 47, 48 or 42. Like that only, dad, everybody. In fact, I did a better job than many others. That's what you will say only if your marks are there. But imagine your progress report contains your marks, average class marks, and the top marks of your class. First rank marks. Then fasak in your father's hand. Correct, Amma? So obviously you got 45. Average mark of your class is 70. Average 70, you have performed below average. Hey. Correct, ma? You can't lie. You are caught upon comparison. You are trying to compare, your father is trying to compare your marks with your average performance. Top mark 95, you got 45. What? Able to understand? So what am I trying to say is, when you compare, then only you will get some sort of value for it. You add some value to it only when you compare. Just imagine, now many countries are launching Mars missions now. India has already done it. We already gone to the Mars and started doing research. See, in tomorrow, future generations, when they talk about past or history, India is the first country to launch satellite to the Mars, successfully launching satellite to the Mars. When you say first to launch to the Mars, such a pride. Correct? Because no one has done it. So here first always comes when no one else is there into it. Now China, US, okay, even Dubai, everybody are launching their satellites to Mars. Okay, which they will go to Mars after 7 months or 8 months from now. Okay, if they go. If they go. Okay, so that also there is a condition. If they go, if they are blasted in between, if they are gone, we don't know. Okay, with due respect to the scientists who have worked very hard, hopefully pray that their satellites also will go. Okay, What I'm trying to say is comparability makes such a huge thing. For example, friends, why are you doing CA? Because compared to other programs, CA is far better in making career options. You have compared unknowingly, indirectly, you have compared. BCom, CA, but CA is good. Let us do CA. CMA, CA, CA is good. CS, CA, CA is good. You try to compare and found the best course in the market that is available for you as of now, and you have done it and you have entered into it. Correct, my dear friends? That is where comparability is all about. Comparability. Even you see, when you go for shopping online, you will search what is the price, and then you will go offline and buy, because there also you are comparing what is online price, what is offline price, which one is better. Accordingly, I'll go and buy. Knowingly or unknowingly, you try to compare each and everything. Understand? Okay, sir. But what is comparability here? You should make your accounting in such a way that it must be, we should be able to compare our company's accounts with other companies. Understand? For example, HDFC, ICICI Bank, I should be able to compare them. For example, say SBI, ICICI Bank, I should be able to compare them. Understand? Not only with others, with my previous results also. For example, last year SBI performance and this year SBI performance, I should be able to compare. When that comparability comes into picture, friends, you can actually get into future analysis also. Okay, futuristic, future oriented analysis, and you get better output as well. Understanding, friends? That is where you need to understand about comparability. The accounts that you are making should be comparable. Next, faithful representation and reliability. Almost these are same, my dear friends. Almost those both, again, reliability and faithful representation, both are same, almost same. Okay, faithfulness, it means those who are using your account should be having some faith on you, and you should be represented in such faithful manner. Okay, Namma, like for example, if you are a private company, more faith will be there than being a sole proprietary concern. Such kind of thing. But more or less, reliability and faithful representation both are almost same. Now let us think of neutrality first, then we will talk about substance over form. What is meant by neutrality, sir? This is what is being told to an accountant. Being accountant, be neutral. Be neutral means what? Just show the transactions which have actually happened. Don't put up additional transactions. Don't in simple terms, don't involve into frauds. Just be neutral, and whatever actually happened, you do it. If 1 lakh transaction happened, write it as 1 lakh. If 1 crore has happened, write it as 1 crore. If 10 rupees happened, write it as 10 crores. That's it. Be neutral is what an accountant should be. I should make some benefit to the organization. I should make some benefit to the directors of the company. I should make some benefit to the management. I should make some benefit to somebody else. No. You should be neutral while making your accounts. Understand? When I'm talking about neutral, just do what is being happening in the organization. That's it. Truthfully, you have to make it. That's what it is. Neutrality. You should be neutral. Understanding, friends? Next, last one, friends, full disclosure. Full disclosure or completeness means you should not leave any transaction. You should be showing each and every transaction. Full disclosure must be there. Full disclosure relating to all the transactions. Full disclosure relating to most likely all the calculations. Okay, footnotes, working notes, everything. Fully you have to disclose everything. The name itself is telling full disclosure. Understanding, friends? Now, that's not a great task, friends, but now important aspect is substance over form. The last topic, last discussion for the day. Okay, so that our concepts and conventions will be over, and now we can tomorrow's session we can get into capital and revenue expenditure and contingent assets and contingent liabilities. Okay, my dear friends. Now, after tomorrow, what I'll do is I'll make company accounts available for you. Okay, I'll give the links to you all, so you can actually start preparing those company accounts. Okay, Namma. So please ensure that from Tuesday Daily you will have a dosage for 5 to 6 days, almost 6 to 7 days. Continuous company accounts will be there. Please ensure that you are doing it. Okay, after 6-7 days we will get back to partnership. We'll do what do you call that, other concepts we will start involving. Okay nama, we'll start getting into other concepts as well. Okay nama, chalo, let us think of substance over form. What is substance over form? Substance is more important than legal form. Substance over form means what ma? The substance is more important than legal form. What is meant by that? Let me give you an example. Imagine all of you know about leases. Okay, I'll take an example of lease. Of course this is out of your context, but still I would like to take an example of lease. Okay, in a lease what will happen? I will give an asset on lease. Okay, imagine there is a building, my dear friends. There is a building. This building I will give, okay, who am I? I'll call him as lessor, or for you to understand, he is the owner of the building. He is the owner of the building. Owner of the building gives the building on lease to the tenant. Tenant means lessee. This fellow is tenant. When you give this on a lease, friends, there are two types of leases. First one is finance lease. Second one is operating lease. Operating lease. Now what is meant by finance lease, sir? Finance lease means, for example, building will have some useful life, nama. Useful life. Okay, useful life. Imagine building has useful life of 25 years, ma. Okay, but under finance lease, you gave lease for 23 years. It means almost full useful life. I'm saying majority of the useful life of this particular building is used by whom? Lessee is using it. Lessee is using it. Understand? So it means, and that too, in finance lease, the lessor covers what do you call that, covers cost of asset in form of rents. In the form of rents, you will recover your full building cost. Whatever you have spent for building, fully you will recover out as a rent itself. You will be covering full. Try to understand. Out of 25 years of useful life, 23 years used by lessee. And owner covers the cost of the asset also over a period of the lease in the form of rent. It means when you calculate the total rent together with when you discount it, what is meant by discount and all, you will learn in future, ma. Okay, when you discount it and all, discounted cash flows of the entire rent, if you consider, you will recover your cost as well. It means if you see these things, friends, can you say it is almost like a sale? Almost like a sale, right? See, almost useful life is being used by somebody else and you are recovering your cost as well. So obviously, though the building is given on lease for rent to a tenant, but still it almost amounts to sale. That is why, though lessor is the owner legally, he is the legal owner. It means documents are all with this fellow, lessor. Documents are all with this fellow. Building documents is in his name. Still, he will not show it as assets in his books. He will not show, because legal form is not important. The substance, the core substance, the core actual concept is involved over here, important over here. What is that? Tenant is using the asset over a useful life of the asset, and tenant is paying the full cost of the asset. That is the why, though he is legally not the owner, but this fellow will show asset in his books of accounts. He will show as his books in his books of accounts. Though he is legally owner, he will not show because it almost amounts to sale. Understand? This lease almost amounts to sale, but this lease, friends, only it's not. It doesn't mean that it is on sale. I mean, sorry. Again, come back. Something flashed my mind. Sorry. Okay. Though lessor gives the building on lease, on a lease also, but this lease almost amounts to sale. That's why lessor, though he is legally owner, cannot show the accounts in his books of accounts. Though lessee is not the legal owner, legally legally he doesn't have any documentation relating to buildings, but he will show it as his asset. That's what we are calling it as substance over form. Legal form is not important every time. The substance is important. Understand? Substance is important. The main aspect of it is more important than the legal form. Understanding, friends? So this is how you have to understand the meaning of it. What I request you is, I do not know whether you have studied or not, but please open your first chapter, this unit relating to accounting conventions and concepts, friends. Please go through all the concepts, friends, as though you are reading a novel, okay? And please underline whichever point you did not understand. Please take a photo of it and please send it to my WhatsApp. WhatsApp link is in my description below this video. Please send it as a photo, my dear friends. What are the points you did not understand? If at all some points I would have missed, God knows, okay, I would have missed some points. Please ensure that what are the points I missed or what are the points you did not understand. Please take a snapshot and send it to me so that I'll cover those points as well. Okay, now friends, thank you so much for your participation. Meet you tomorrow and we will finish off with contingent assets and contingent liabilities by tomorrow. Right, friends?